Welcome back to Climate Finance and the Carbon Markets. I'm Charles Bedford. We're producing and distributing this from the Hong Kong University of Science and Technology. I have with me today a special guest, Jordan Grace, who is currently the head of sustainability performance at NAB, one of Australia's 4 big banks. And we're going to talk a little bit today about the corporate perspective on climate and the carbon markets, and try to get a little bit of a sense and get our heads into the space that Jordan has occupied for quite a number of years with NAB. Can Jordan tell us a little bit about sort of where you come from and how you got engaged in the environmental movement, and in particular what sort of role you're playing with NAB?
Thanks, Charles. So as you said, head of sustainability performance at NAB. What that currently means is largely looking at NAB's ESG reporting and performance obligations. So covering things such as our reporting up against the Global Reporting Initiative, integrated reporting, various frameworks internationally, but also the setting of targets internally, how we might perform against those and execute, how we align and look at what our peers are up to and how we might want to try and beat and compete them in particular areas or not. My own kind of journey to this point, I've been in the sustainability team here at NAB for about 10 years, covering a few different roles. I've been lucky enough to have chances to kind of dive into particular areas. My own background was banking, so I studied commerce, investment finance at university, and kind of came through working in the branches, working in private banking, before I started to have the, shift around how did I want to be spending my time and where did I want to be investing my time in particular areas. So that kind of values aligned discussion of, well, if this is where I'm spending my work hours, how might I be able to do things that generate additional positive good somewhere in society? And can that even be done in a big bank? Like, what are the different ways to do that? So that led me into at the time called a corporate responsibility team, in a strategy space, but really focused in on community. I think that the kind of theater of corporate social responsibility that sat under philanthropy and in that space, worked in that for a while around volunteering, giving, all of those sorts of activities, made my way over to the more strategic areas of it, which, the kind of complex challenges that you're trying to grapple with as a major organization. And in particular, I think as a bank where you're touching all parts of the economy, and as a major bank in Australia, you're interconnected with everything. So the opportunity to drive change at scale is ginormous, which is really exciting and challenging, but does, of course, mean there's always more to learn. More recently on the reporting side, that's also kind of brought in our efforts around our own operations when it comes to climate change and what we're doing to reduce our emissions and maintain carbon neutrality at an operational level, but of course also looking at the change that we can support through our customers and who we finance.
That's great, and some really some good stuff to unpack in what you've just said. The arc of your career so far is tracked, through this sort of the way that banks and the business world thinks about the engagement in the climate, right? I mean, you were a corporate social responsibility guy, but that was mostly within philanthropy or the marketing side of the business. It's really a silo that was mostly separate from the strategy of the business itself and the sustainability, performance, and engagement. That it must be a relatively new endeavor. Is that fair to say, or?
Yeah, I think aspects of it have kind of always been there, but really the mainstreaming of it and the proper integration into the machinery of how the bank itself works is only becoming much more real over time. I think, as you say, certainly when you look at the history of CSR, was it granting programs out there purely for a reputational perspective, maybe for employee engagement, a little bit of social license, some discussion of the different types of benefits that you might hold. But absolutely now, I think, we spend a lot of time, and I think that we're seeing it everywhere, the demands on companies to understand societal environmental challenges, not just understand them, actively manage the risks and seize the opportunities they present, is very real. I think that we've been talking about it for a long time. And, we would have some investor conversations, we would have some customer conversations, but the scale to which that has shifted over even the last 3 years, for me, has been kind of breakneck speed, and which is great. It's really great to be able to have different levels of conversations with people now.
Yeah. No, it must have felt like you'd gone from a silo into the main, or sort of a backwater into the main part of the river in terms of the both the bank and as well as globally. It's been a big change.
Yeah, I think that's fair. And even like when you talk about globally, I think just the sustainability challenges and climate in particular, but also human rights, and I think increasingly biodiversity, and obviously there's interconnections between all of those, has really become more dominant. And the role of business in those has become, I think, a little more easy to discuss in particular ways. I know, we're not necessarily focusing on different kind of management theories around corporate social responsibility, but when the shared value theory came out in 2011, it was obviously very, very popular, and the papers were getting thrown around different boardrooms. But there was a real level of discomfort with the idea that companies might be seizing issues of sustainability as areas they could chase competitive advantage, which I understand when that is looking at it from a lens of we're not actively trying to change the broader business to improve our impact on society. If it was just we came up with one cool business transformation in one part of the company that is maybe helping mitigate climate change, and the rest of our business is absolutely not doing that, I can understand the criticism. I think that as we've developed that conversation, even that conversation has evolved to be able to be held in a more serious way, a more complex way that you can get into the actual issues that you want to cover. So it's no longer just you're clearly bad guys, you're clearly good guys. I think that we're able to look at what the challenges are and how we might address them together.
Well, I think that's really well said. Let's shift a little bit into the sort of the climate space. And so you're in charge of kind of reporting and policy and engagement around climate and the climate sustainability. How does the bank think about this? What do you guys do? Report, how do you engage in policy, and how do you engage, your clients and your customers and your communities that you serve? What's the climate agenda at NAB?
I think it's, in its simplest way, I think it's very similar to what you're seeing everywhere. And the climate agenda is the Paris Agreement, and how do we achieve what has been set out. So for us, of course, one of the goals is to align to net zero emissions by 2050. And I think that we've seen over the last year in particular, plenty of countries and companies kind of putting their commitments, or at least their pledge, behind let's try and achieve this goal. For us, if I can kind of cover it, really, if that's our overarching goal, we know that the biggest way we can drive that impact is through our customers and the products and services that we're offering them. So we are 100% committed to working with our customers as they decarbonize, and we look at what pathways they need to be on. And there's opportunities, of course, for us there around looking at the types of products we have, whether it's behavior-linked financing that might offer discounts, so sustainability-linked lending, obviously being an example of that, but also the risk settings that we have for particular industries as that time goes forward, and are they aligned with particular trajectories or not? That is front of mind for us. How do we look at the shifts that need to occur across the economy? So having that as our goal, we are a member of the Net Zero Banking Alliance, which requires us to kind of really focus on that near-term action. It's not enough to kind of just be like, it's 2050 net zero emissions, we'll get there somehow. It can't just be green wishing. We have to have a tactical plan for how we're going to achieve that. So our current timing around that is to make sure that we publish sector-specific interim decarbonisation targets. So we're looking to do that in our end-of-year reporting this year. And you're starting to see banks who have signed up to Collective Commitment to Climate Action, now Net Zero Banking Alliance. You're starting to see those sector-based targets come out, which I think is really helpful, because it starts to make it go from let's get to net zero by 2050 in some way, to here's what we need to do in the next 8 years. And then we've got the plan to go forward. And it's a rapidly evolving space, and obviously when we talk about different sectors, the different pathways and trajectories, Not all of that data is known. We certainly wouldn't be able to access all of the data for all of our customers around their own emissions, but that is front of mind for us. Managing climate risk is obviously also right up there. Actually looking at the physical impacts of climate risk that we're all experiencing, globally, particularly in Australia, we're seeing that increasing frequency and severity of natural disasters. So, jumping back to my kind of role many years ago, our community focus is absolutely on how do we help Australians before, during, and after natural disasters. That's not just because we think it's a nice thing, it's because we know that problem, unfortunately, is going to increase as the impacts of climate change are felt. Sitting underneath the kind of goal and then how we work with our customers, how we manage climate risk are, I guess, what we call kind of key foundations. One of those is absolutely actively reducing our own operational emissions. We've been carbon neutral, certified carbon neutral for our Australian operations for over a decade. Over that time, we have been continually trying to actively reduce Scope 1, Scope 2, Scope 3 to the extent that we could measure and control them emissions, and offsetting those that we couldn't. So that's been a key part of it. But also really making sure that we've got the capability in our workforce. So where do we need to invest in training to help understand and solve these challenges? Working with our customers, we need to make sure that our bankers are trusted advisors. We have to make sure that they've been trained in the right way for it. And sitting alongside that, obviously, I think coming back to the complexity of the challenge is research and partnerships. We can't just pretend NAB has all the answers or can figure them all out on our own. That's ridiculous. We're going to have to work as part of these things. So like Net Zero Banking Alliance or the Australian Industry Transition Initiative, different things where we can work with large customers or industry associations to tackle the challenge together.
That's it's a great summary, and I didn't realize that NAB had been at this for 10 years as carbon neutral for 10 years, and pretty. I mean, before this time, and we've noticed this in the corporate sector in Australia before. There's pretty strong leadership amongst Australian corporates, in particular, whether it's the extractive industry or the finance world, the tech sector, the leadership that's coming out of the Australian corporate world actually might make a comparison or contrast with other sectors, other countries and their business leadership, but it also even a contrast with the leadership in government and in the policy sector in Australia. I mean, it's kind of interesting that the corporate world is driving so much of this activity in Australia in particular. What do you reckon that's about?
Yeah, I mean, it could be a whole range of things that kind of point to that. I think certainly for a while there's been an acceptance that I'll go broader and say sustainability risk is a business risk. It's not just about us kind of having a glossy annual report that we might be able to put on brochures and send out and be like, look how great we are. There are genuine, significant risks to the bank that we need to be aware of and managing. So I say the bank, that's going to be true for companies everywhere. I think that you've got a pretty engaged and active superannuation fund industry in Australia who are the owners of a very significant proportion of publicly listed Australian companies, who also recognize that those are meaningful and real risks and opportunities. So they'll be engaging with board and management to make sure that those are being addressed accurately and appropriately. And I think there is a bit of a competitive streak, on some of these issues and challenges. You want to be the one that's seen as being better at it. You want to be able to know that, like, if there's opportunities, that your bank or your company is the one that's going to harness and tackle them. So, I mean, in terms of that kind of divergence, I think that those are some of the key factors that have been at play. I think we see varying governments having varying levels of commitments, and even something like, say, TCFD, where you're starting to see it be mandated in different jurisdictions. Being a bank, we're always going to keep an eye on the global landscape and try and understand where things are likely to head. Anyway, even if we're not there yet in Australia, we should be understanding that risk and building that into our own investment of how we might want to manage it going forward.
And you a couple of minutes ago, you mentioned sort of the bank's Scope 1, Scope 2, and Scope 3 emissions, and the ability of, you mentioned this a couple of times already, the ability that you have to go upstream in the supply chain. In your supply chain, I guess Scope 3 is the people you lend to, right, or the people who are your customers, which is it's a much larger and more impactful supply chain than a widget factory, right? Who's looking to source some raw materials and then sell them on to somebody else. It's a much more complex problem for banks and finance. And tell us a little bit about how you're wrangling with the Scope 3 emission problem, and what sorts of services are you providing to clients to get their heads around their emissions problems?
Yeah, it's absolutely, I think we do recognize that is where the change we need to drive has to happen. We can't kind of stop doing things in our own operations, but working with customers and encouraging customers and supporting them as they're trying to do what they want to do, and actually recognizing, whatever their initiatives may be, making sure that we're set up to support investment in those, and the allocation of capital towards those is front and center. So coming back to the Net Zero Banking Alliance, there's guidance around target setting, which is pretty clear. And I think about the credibility, the alignment to external peer-reviewed targets and trajectories, that we can't just make something up and be like, this is 1.5 degree aligned. We do have to invest in, understand, and make sure that that is really sound and solid before we put it out there, as this is what we're trying to achieve at a portfolio or at a sector level. Diving down into, well, what does that translate into for customers? How are they feeling it? I think that's where we're starting to see, largely, I'd say within Australia, it's been very much at the corporate level. You've seen more activity on green loans or sustainability linked loans for particular initiatives that will drive down emissions within those companies. I think that the change that we're all starting to see come through is maybe that happening in different markets at a much kind of smaller value, but a much larger volume. So what we're seeing is that change going into, say, what does it look like for small and medium-sized enterprises, and grappling with what's a meaningful product? What changes are they trying to achieve? How can we do that as a bank? How do we help them? And in the consumer market as well, there's innovations everywhere. So there's many, many full-time jobs just even trying to stay on top of that and drive towards it. Whether that's things around pricing or risk appetite, or however that looks, will play out differently in different areas. But they're all the areas that we're looking at.
Interesting. No, it's great. The sort of the thinking through that sort of life cycle of the business, and the life cycle of carbon emissions, and the scopes 1, 2, and 3 kind of emissions. You must have engaged a fair bit in the offset market as a bank over the last 10 years. Tell us how what the history is in terms of how you've thought about, offsetting your impacts, and what you've done.
Yeah, that's right. So I think coming back to that point around being carbon neutral for over a decade means we've been purchasing offsets for over a decade. I can't pretend to have been the one in charge when that started, but I think that we have been continuing. And I guess, for us, obviously, there is the actual demand and need. If we want to achieve carbon neutrality here in Australia, that's certified by a body now called Climate Active. And they have particular minimum requirements around the types of offset units that are eligible or not. I would say that, well, like any conversation around offsets, there's questions on credibility, additionality, what types of offsets are you buying, where are they from, how are you using those? So we certainly have our own kind of purchasing due diligence that we would do on offsets when we're looking at projects that are out there. What do we want to get involved in? I think that we're moving towards a space where we really, wherever possible, would be ideally looking to purchase offsets relevant to the markets that we operate in. So for us, we're predominantly Australian, New Zealand. That's where we'd like to be buying offsets for projects from. In the last few years, we've only purchased offsets from Australian carbon credit units, typically on savanna burning. So I think, early season savanna burning, I think probably the aspect that I'm coming towards there is the additional benefits that may be delivered. So what does that mean from a local economic development perspective for communities? Indigenous owned and led projects are a focus for us wherever we can as well.
Yeah. No, those are great projects. I'm a particular fan of them. In my previous life at the Nature Conservancy, we did a lot of work in Northern Australia in terms of the science and how to do the accounting around that. And so savanna burning, for those folks who don't understand, essentially in many parts of the world, early season fires are burning at low intensity, and versus late season fires, which burn at high intensity and emit enormous amounts of carbon. And if you can actually manage through prescribed fire to do more early season fires on the ground, then you are getting essentially a carbon benefit from it. And as Jordan said, all these other benefits to it, of working with and employing indigenous people, fire rangers, et cetera. So yeah, cool projects. So when you're looking around, you're thinking about both the scientific integrity of, the greenhouse gas integrity, but also the co-benefits, I guess, as well. And is that?
Yeah, absolutely. And I think, look, we're seeing it everywhere. I think that the shift towards nature-based solutions is absolutely front of mind as well. We are considering, A, is it geographically relevant to where we're operating? B, how does it actually stack up? Do we think it's credible or not? I should say, first and foremost, our focus is on reducing our emissions. It's getting scope 1 and 2 down. That is absolutely our focus, outside of what we're doing with customers and making sure we've got those decarbonisation targets set as well. But we still are purchasing offsets currently, and we will. And for hard to abate sectors going forward, that's obviously going to continue to be necessary at a scale that is gigantic. I mean, the demand that we're seeing as these kind of net zero commitments pop up is clearly huge. But for us, for sure, focus is on reduction. But when we're purchasing offsets, geographically relevant, credible, what kind of co-benefits are they delivering? Is it local economic development? Does it link to biodiversity outcomes? And how do they stack up together? So that's the kind of lens that we would put on when we're looking at, is this the project we want to be a part of? And I shouldn't kind of pretend that I'm out there identifying all these projects or my team. We would typically work with those who are actually out in the field, who have expertise in identifying projects, bringing those forward for shortlisting and figuring out which ones we may want to go with.
And do you offer services to your clients in terms of guiding them towards the best carbon projects? Is that something that the bank can do, or is it sort of outside?
I think this is a really interesting space around how banks might choose to get involved in carbon and carbon trading and even carbon farming, and how we can help capital get towards projects that are doing that. It's certainly something that we're investigating pretty actively. And I think, well, to me, that's not unusual. I think that's something that banks everywhere are investigating pretty actively. For us, I think that I do come back to, when I think about banks, I think about how efficiently we can allocate capital towards where it's needed, and with the lens of what is needed for sustainable development and what are the impacts that we're trying to achieve. So absolutely, I think that projects that can generate carbon offsets is a part of that conversation. I don't know, I wouldn't say that we've got that solved, but I think that it's certainly one of the areas where we see significant opportunity and also positive impact that can be driven.
Yeah. One of the things I notice about the offset markets is that it's really tricky, both just transparency, but price is difficult to figure out what the right prices are. The quality is just unclear, and you have to do a lot of digging around, and it's really some very subjective kind of judgments that are made. Some of the you figured out how to do enough due diligence, at least, to get a big bank comfortable with the risks of investing in one project versus another. What are the other things that the carbon market needs to do to become more credible? Is it a ratings system? Ratings agencies like S&Ps and Fitches and others? Is it a higher level of scrutiny? Does government need to be more involved? What are your views on that?
I think that when you talk about the kind of government role, obviously the big complexity has been around the kind of international trade relations of carbon credits and offsets and how they work. And certainly we've seen examples of projects where there have been governance issues around credits being issued, reissued twice, forests get burning down. There's been challenges and problems. So I think that not pretending that there hasn't been. I think identifying those and addressing those is critical, and that might be local government led. It might be what needs to happen at the kind of, I guess, supranational level to try and address that. I think one thing that we're involved in, we and a bunch of banks have been looking at is Carbon Place. Now it was kind of initially Project Carbon. We partnered with a few different banks internationally around how might distributed ledger technology help from the traceability and trackability of units, and is that something that could be useful as well? So that's still relatively early stages as a development between us and banks, and more banks getting involved in that. So I think that will be a really interesting space to watch. I can't pretend I haven't led that in any way, but I do think that that's an area where innovation is happening in almost all little aspects of the offset market, climate change. Everyone's got a great idea and are coming up with different things. So I think making sure that we're alive to that and involved in that is a focus for us commercially, so that we're not missing out on opportunity or better ways to manage our risk.
I don't want to keep you too much longer, Jordan, and this has been a great conversation. But you've been at NAB a bit over 12 years, and the last time you were, you in university, you were in the same position that some of the folks who are listening are in, and looking out from that perspective today, what would you advise, graduates of, graduate schools, master's degree students? How would you advise them to proceed if they're really interested in the sustainability field? What's the way to kind of jump into that? And what are the big opportunities?
I feel like it's probably a good time to be studying this kind of degree. I think that from a career perspective, the demand to take action is so significant, and business has to be involved in so much of that change that they're going to need people who have the formalized technical expertise. When I kind of stumbled into this aspect of my career, I was coming to it, with a banking background, and I had to do a lot of on-the-job learning around sustainability and corporate social responsibility, which, I then went on to formalize. So I think if this is the area you want, there will be opportunities in a whole range of different companies, because every company is, or absolutely should be, thinking about what they need to do to decarbonize in particular. But it's not just that. There's also biodiversity and ecosystem services, and helping companies better understand their reliance on or impact on those, on those areas. So that's just the environmental side. I think that we're seeing a whole range of different demands on the social side as well. And so I think for me, A, it's a good time. B, the passion for it really does come through. And I think that if you are pursuing that, you will have the opportunities. And it's also a mixed skill set. I think that if you're chasing a particular role, whether you had a marketing background and deep knowledge in sustainability, or a financial background and deep, those different blends of knowledge are going to be really important. So I think that identifying the different skills and backgrounds that you can bring in, whatever initial majors you may have had, whatever your work experience may have been to this date, is super valuable. If you're already in companies and you're not in that space, get involved and find ways to help them. That might be, hey, like, I don't want to volunteer a couple of hours a week on a particular project. Let me show that I'm valuable. I think that those kinds of connections, if someone came to me and was offering that from within NAB, I would always be able to find some work for them to do. And then I would remember who they are when we had opportunities pop up. So I think that there's certainly, it's a positive environment to be trying to find work in this space. And, for me personally, it's such a great part of, if you're going to work in kind of a corporate landscape, what a place to be a part of it, to be able to try and drive this change. It can be frustrating as hell at certain points, but it is also really rewarding when you can see that change come through.
That's awesome. That's great advice. And I think in particular about sort of doing it, if you can't jump into it immediately, to basically find the guy or the girl who's doing this work in the company you're working in, and get in front of them and figure out how to add value to the projects that they're doing. That's super smart. Well, thank you very much, Jordan. And we really appreciate you coming on the podcast and talking to the students. This is it's good to get your perspective, that sort of corporate look and mindset of why we're doing this. And it does continue to strike me that the corporate sector has essentially decided to factor in the external costs of carbon into their business activities in the long run, their 50-year plan, their 20-year plan, their 5-year plan. And those timeframes, I think, allow for a longer term view than a lot of politicians have. So maybe there's hope on the climate front from the corporate sector. Thank you very much.
Not a problem. I think absolutely agree. I think, not to say that corporates are heroes. There's plenty of issues that need to be solved at all levels, but it's really exciting to be part of the work to try and drive positive change.
All right. Well, that'll end up that'll finalize our session today. Thanks so much. We'll talk to you again soon.
Perfect. Thanks, Charles.